Mark Zandi is a well-respected, well-known economist who's been with us on Capitol Hill many times. We appreciate your being here. I'm especially interested in your perspective of what you heard this morning, Mr. Zandi. We invited you to talk to us a bit about the impediments to economic growth and to job creation, particularly by small and medium-sized businesses. And these stories are particularly troublesome in the sense that there are people ready to employ other people who can't get the kind of business credit necessary for expansion. We appreciate your being here to give us your perspective. Mr. Zandi, you may proceed.
Thank you, Senator. Thank you, Committee, for the opportunity to be here today. They are very compelling stories. Just so you know, I'm not an egghead. I did start my own company 20 years ago. It was not called economy.com 20 years ago, but it morphed into that, and I sold it 4 years ago to the Moody's Corporation. And at that time, we were employing 125 employees. We didn't quite start in a basement, but it was a condominium. So I know what it's like to be a small business owner.
It didn't occur. The term egghead didn't occur to any of us.
Oh, well, as I lose my hair, I'm sure it'll become more applicable. Us. Yeah, right. I'd like to make 4 points in my remarks. First, let me say the recession is over. The Great Recession has ended. And I think that's largely due to the policy response, what the Federal Reserve has done, Treasury, FDIC. But I don't think it's any accident that the recession has ended at just the same time that the fiscal stimulus package that you passed earlier in the year started to provide its maximum economic benefit. Aid to unemployed workers, aid to state government, help to the housing market for the first-time homebuyer tax credit, cash for clunkers, all very important. The recession is over. The value of what we're producing, GDP, grew in the third quarter. It's going to grow again in the current quarter. So the recession is over. Point number 2, the recovery. It's going to be very fragile, a bit of a slog, at least through 2010. There are many impediments to the economy's growth. I'll list a few. The foreclosure crisis, that continues on, so we're going to see more house price declines this spring and summer, coming spring and summer. The ongoing problems at state and local governments, they're not over. Revenues continue to fall, and there will be significant job cuts if the states don't receive more help for next year and in their fiscal 2011 budgets. The problems in the commercial real estate market are very severe, and they're undermining many small banks. We've seen 125 small banks fail this year. We'll see many more, hundreds of banks fail. And that's very important to small business because they rely on small banks for credit. And then, of course, the job market. With a 10.2% unemployment rate that's rising, the risk is that it's going to undermine confidence and compensation. If people's wages are cut, they can't continue to spend, and that's going to undermine the fragile recovery. So we need to see job growth, job creation. And this leads to my third point. Small businesses are key to job growth. I'll just give you a few statistics. Firms that employ fewer than 100 employees account for over half the net job losses that we've experienced since the recession began in late 2007. Another very important statistic, if you look at firms that employ less than 20 employees, they account for, and I'm rounding, they account for 25% of all of the nation's jobs, but they accounted for 40% of all the net job creation in the last economic expansion in the mid part of this decade. So without small business, the job machine isn't going to get going. And the key problem for small business, as we've heard, is credit. They can't get credit. And I mentioned the small banks. They're very important to small business, particularly in smaller communities. The other you mentioned, and that's the credit cards. Credit card continues to decline. 100 million cards have evaporated since the beginning of the year, many of those to small business. Now, this goes to point number 4. What can we do about this? I think the most obvious thing is to empower the Small Business Administration to make more credit, to allow for the creation of more credit. They were given some additional tools to work with in the stimulus package, and that has been very effective. In fact, so effective, they've run out of funds, and I think they should get more funds. And there are a few other things that can be done to the SBA program to make it more effective. One was already discussed, and to me this is a slam dunk. The $2 million loan limit on 7A loans makes no sense. It should be increased. $5 million makes imminent more sense. When you talk to small business owners and lenders, they would agree that that would be very helpful. Also, I think it would make sense to at least temporarily eliminate the interest rate cap on small business loans. Right now, it's 275 basis points over prime. Prime is 3%. You add 275 basis points. That's a 6% rate. That's too low, given the credit risk in the economy. Many small businesses would be very willing to pay somewhat more than that just to get a loan. So I would temporarily freeze that. And then third, I think right now, under current rules on the stimulus, loan guarantees go up to 90%. I would raise that, 95%, 97.5%. Not forever, but for at least a year, because I think if you take more risk, that the government takes a little bit more credit risk, we'll get a lot more credit out there to the economy. So that would be very important. One other thing about credit that I think is important for small business, the secondary market for small business loans is frozen, the securitized market, and there is no syndication market. There's $15 billion in TARP that's sitting there for this purpose, and it's not being used. It's being used for a lot of other things. It's not being used for this. And there's reasons for that. There are impediments to doing it, but I think we need to work much more aggressively to utilize that TARP money to get that secondary market going, because that will help facilitate lending as banks will be able to offload some of their risk into the secondary market. So credit is key to small business. Small business is key to the job market. The job market is key to the recovery. This is a very important topic and very worthy of the discussion today. Thank you.